Today we're going to talk about what's personal accounting and how does that tie into the drive to FI? Well, personal accounting is the one thing that most entrepreneurs love to do. It's keeping score. It's keeping your own score, your personal score about how well you're doing in your goal toward financial independence. And as an entrepreneur, you need to be able to keep score, not only for your business, but for yourself. It drives you, it provides that momentum, it gives you the opportunity to be able to set goals and then achieve them, and then set stretch goals and achieve them, and continue to push yourself beyond what you thought you were capable of. And that's where the personal accounting piece comes in. Personal accounting is taking a look at the accounting and bookkeeping that you do for yourself and your personal finances, and it's handled a little bit differently than the business accounting that you're used to doing. So knowing the differences and keeping them separate are going to do two things. One, it's going to allow you to hopefully give you a little bit of emotional distance from your business and see how your personal business is doing, your personal life, your personal finances outside of your business finances, because sometimes the business is not doing nearly as well as you are, or vice versa, and they need to be managed a little bit differently. Second, they're going to keep you out of a little bit of hot water, particularly tax issues, by maintaining a separate set of books and records for your personal life and your business life. The more you intermingle them, the more likely it is that you're going to run into some tax issues down the road. So keeping those two separate is really important. I always recommend using a personal financial software package for those personal accounting tasks. I personally use Quicken, and I used Microsoft Money before that. And there's a lot of decent packages out there, um, and they can help you with everything from managing your bank accounts to managing your rental portfolio to calculating your capital gains and losses on sales for your stock or bond or crypto portfolio. So again, those software packages, they cost generally less than $100, and you're able to do a whole ton of things, and it makes handling your personal finances that much easier. So I recommend, if you don't have a personal financial package, to get online, find yourself one, take a look at a number of reviews, see which works best for you, see if you can do some trials, and then pick one and stick to it. Um, there's a couple personal accounting tasks that everybody has, and then there's a few that some folks have. So I'm going to talk about the personal accounting tasks that everybody has. Number one is to balance your cash accounts. If you have a checking account, you need to balance it periodically to account for any differences between what's in your statement and what you wrote down for checks or deposits. Now, if you utilize one of those personal financial accounting packages like a Quicken, you link it right up to your bank. And so it'll go out every day and pick up your bank transactions, load them into a electronic check register, and you're going to be able to balance your checking account in about 30 seconds. Most of us who are, my age and older started having to do this by hand, and I will tell you that doing it by hand is not the way to go. You're going to thank yourself for having spent a little bit of money to get those one of those software packages that can import all your transactions, and then both classify them for you as well as allow you to reconcile that bank account. So you've got the opportunity to be able to do that. Daily balancing is the way to go. What I normally do is I get online either at the beginning or the end every day, hit update. It imports all my transactions. It updates my portfolio. With Quicken, you actually can link your property to Zillow, so it'll pull down your property values. And then if you've got rental property or investment property, and then you're able to get a snapshot of your financials every day. Now again, that may be a little bit overkill, but I'm an accountant. I tend to overkill accounting things, but it's really easy. It takes like 2 minutes. Push the button, everything downloads. You take a quick look, see if anything looks wacky, reconcile, and go. So that's highly recommended. Um, you balance your checkbook and you take a look at those charges in your bank account to keep tabs on all the things that you haven't kind of thought about in a while. It'll record credits like automatic deposits and refunds from other banks, and will note interest, and you can see patterns in behavior, like, you know, how much you're spending in various classifications and categories. And a lot of systems like Quicken will take a look and see Starbucks and will immediately assign it to, you know, eating out. And so as a result, you're able to get a really quick view of what your personal finances look like by just managing your cash accounts. And that's going to be your money in and your money out. The program will also give you the opportunity to see if there's recurring transactions, you know, where you may have a subscription, because you could tie your credit cards in there as well. So you may have a subscription that you're like, I don't know what the heck this is. I don't watch HBO Max anymore, and you cancel that out. So it's a good, easy way to kind of review everything in one spot, see where you're spending your money, see where you might be able to adjust your spending, be able to track your net worth, and, you know, balancing those cash accounts and looking and reviewing the activity in those cash accounts goes a long way to trying to help you figure out what's going on in your financial life. The credit card accounts are very similar. They tie into, and I'm going to use Quicken as the example because that's what I use. They tie into Quicken. You're able to take a look at it and go, okay, here's what's been charged on my credit card. I don't recognize that charge. You can dig in a little bit, or you can go, hey, I no longer, you know, belong to Inglewood Country Club. I'm going to, you know, call and cancel that because I haven't been there in 2 years. You know, I don't use this gym membership anymore, and you can see those things much easier when you've got it all sitting in front of you in a report that allows you to see where you're spending your money. You also need to make sure that the bank and you haven't made any errors in your records, and that there's, you know, nothing going on that's a little bit wacky. And, you know, if the software program doesn't know what to do with a transaction, it'll record it as uncategorized, and those are the ones to really scrub through. First couple weeks you're doing it, first month, you know, it pays to make sure that the automatic categorization that's being done by Quicken kind of aligns with where you want those expenses to go. And then after that, it's going to take care of those, and then really reviewing the uncategorized transactions becomes a very quick and easy, almost painless process. So that's the balance your cash accounts, your credit card accounts, utilizing that financial software. That's going to go a long way, and it's going to cost you less than $100. I mean, it is. If you're serious about making sure your finances get in order, it is money well spent. Number two is one that we're all kind of faced with. I'm going to focus on the U.S., but pretty much everywhere in the world, you're going to have to file your taxes. Taxes are a necessary evil. It's how the society kind of pays for all the nice things that are provided by our local, state, and federal governments. Filing taxes can be really difficult, but certainly not impossible, and you can do it on your own. Whether you use an accountant to do it or you do it yourself really will depend on your comfort level with the accounting practices, how complex your financial situation is, and really how well organized your financials are. And so again, utilizing a good personal accounting software package, or at least keeping really good books and records for your personal life, just like you do with your business life, is going to make filing taxes much, much easier and cheaper. You know, it's certainly a heck of a lot easier if you do it on your own, and, you know, much cheaper if you're going to utilize an outside accounting service, because you're going to have everything well organized and they pay by the hour. So that's the best way to approach it. I'm going to talk a little bit about the federal income tax return here. Some states have income tax, others don't. Normally the state income tax, if your state does have income tax or you have a local income tax, it mirrors to a large extent your federal income taxes. So I'm going to talk federal income taxes as it pertains to personal accounting here, but just, you know, kind of recognize that that stretches over into state and local taxes as well. I use H&R Block Tax Cut for my personal taxes, so I do my taxes myself, as you could probably imagine. And that's largely because I've used it for so long, and it's easy to kind of roll over, and it has a business module and it has rental property module, so it's been relatively easy to just kind of continue along with H&R Block Tax Cut and continue to utilize it. And I generally enter the information manually every year off of my Quicken reports. Intuit also has a product, and Intuit is the people who make Quicken, called TurboTax. TurboTax integrates directly with Quicken, and so as long as your categorization in Quicken is right, when you pull everything over into TurboTax, it will allocate most of your deductible expenses, charitable contributions, all that good stuff, populate it for you, and then it's an even faster review. Again, I started with Microsoft Money and H&R Block tax cut. Microsoft got rid of Microsoft Money. It was a really sad day. So I moved over to Quicken, imported everything, and started using Quicken, and then have maintained H&R Block tax cut now for 12 years, and I've kind of gotten used to that system. There's a few personal income tax terms that you're going to see and use. I'm just going to start touching on them here, and as we go through this series, we'll talk more about taxes. But in general, for personal income taxes, income is the money you make from working or owning assets. It's pretty much anything you get outside of a gift or inheritance. Most states don't tax gifts or inheritance as they're received, and the federal government doesn't tax the recipient of gifts. They tax the giver of the gift. And so if you get money from any assets, so owning assets, selling them, or dividends or interest, or you have earned income from working or owning a business, or unearned income, royalties, those kind of things, those are all income for federal income tax purposes. It's very rare, and there's some exceptions, like municipal bonds, where that income isn't taxable, but it's still income. So income is pretty much everything that comes in outside of gifts and inheritance for federal tax purposes. So when you're going through the kind of calculation of things in your software package, or you're setting it aside for yourself, make sure that you record the classification of income: dividend income, interest income, municipal bond income. And if it's a gift or it's an inheritance, record that separately, so that way you've got the ability to be able to kind of carve that out at tax time. The next thing you've got is our personal exemptions. Now, the 2020 or 2018 Tax Cut and Jobs Act eliminated a lot of the personal exemptions and went to child tax credits. It would not surprise me to see personal exemptions come back. That's a certain amount that is going to be excused from taxation just by the purpose of the fact that you breathe. And so as a result, if you are responsible for taking care of yourself, the federal government says a certain portion of your income is set aside not taxable so that you can meet your basic needs. That's a personal exemption. Again, most of the personal exemptions went away, and the standard deduction was dramatically increased, and there was a child tax credit. And so it's kind of comes to the same principle, though. The federal government says you need to have a certain amount of money to be able to live, so we're not going to tax you on that. We're going to tax you on everything above it. The standard or itemized deduction is a way to take some of your personal expenditures or business expenditures and reduce the amount of taxable income. So a standard deduction is essentially everybody in the United States gets a standard deduction, and that's, again, kind of goes back to this. There's a level of income that the federal government feels is necessary for you to live. They're not going to tax you on that. It's not that high, $20-some thousand in general for a family. If you make less than that, you don't get taxed. The itemized deduction is you take the higher of your standard deduction or your itemized deduction. Your itemized deduction is a classic, like I can deduct my charitables, so charitable contributions. I can deduct mortgage interest. I can deduct, again, with changes to in 2018 Tax Cuts and Jobs Act, up to $10,000 state and local tax payments. I can deduct casualty losses, medical expenses, tax preparation expenses. There's a whole litany of these deductible expenses that you can look at from a itemized deduction perspective, and you get to take the higher of the two. So you get to take either the standard deduction or the itemized deduction with your mortgage and property taxes and all those other things in there. Whichever one's higher, you get to take off your taxes. Having said that, one of the challenges because of that standard deduction is that a lot of the itemized deduction, especially as the standard deduction has gone way up, a lot of those itemized deductions aren't really going to end up saving you taxes anymore. And with with mortgage interest rates as low as they are, and with the state and local tax cap at $10,000 for property taxes and state income tax, local income tax, etc., you're really kind of in a position where having a business, whether that's a side hustle business or whether that's a full-time business, and legitimately charging expenses to that business is probably going to save you a lot more in taxes than just kind of running the way it used to, where you'd get a big house, giant house that has massive property taxes, and you'd throw all that through, bring your income way down, and then get the capital gains on the backside with the sale of the home, where some of that would be exempted because of it was your primary residence. A lot of that is those tax strategies have really changed with the Tax Cuts and Jobs Act. So it's now far more lucrative from a tax perspective to have a side business or a primary business where you can legitimately expend some of that and deduct some of those expenses, and have rental property where you can deduct some of those expenses. Your taxable income at the end of the day is going to be a calculation that takes into account your deductions from, it takes income minus deductions, and that gives you, simplistically, your adjusted gross income, and it's on that number that you pay your income taxes. And again, that's, there's a lot of ways to try and skin the cat as far as how to minimize the amount of tax you have to pay legitimately. But the best way to be able to do that, and the best way to substantiate it in the event of an audit, is to have a really good set of personal accounting books and records, software backed by the source documents, to be able to substantiate your deductions in the event of an audit, and to be able to provide that information to your accountant, so that way you have a reduced cost associated with putting your taxes together, or make it easier for you to do it yourself. There's a few other things that you're going to potentially have to factor in depending on what you own. So you may have gains or losses on investments sold. That's crypto, that's stocks and bonds, that's baseball cards, that's classic cars, that's pretty much anything if you have a gain. If you have a loss, the government will look and go, was it a hobby, or was it a business, or was it an investment? And you can potentially take a loss on a classic car, for instance, if you sell it at a loss, but you're going to have to show that it was held for investment. That's a pretty high hurdle. So again, if you make a gain, you're going to have to declare it. If you had a loss, you may not be able to deduct it. But if you have any of those investments, anywhere from stocks, bonds, and crypto to baseball cards and other collectibles, you're going to need to track your capital gains and losses. And again, that software packages make that really easy. The other thing you're going to need to factor in is dividend and interest income. And dividend income is taxed at a different rate than ordinary income, so you're going to need to track that separately. And we're going to touch on those later in the series. The other one is rental properties. Keep your rental properties separate. Rental property business, if you have long-term rentals versus short-term rentals, need to be kept separate because they're taxed differently. So again, having software packages that kind of work for each one of those are not that expensive, will save you a lot of time, a lot of aggravation down the road. The bottom line is get and start using one of the low-cost personal finance accounting packages available, and start keeping score. As well as start getting used to measuring and managing your financial position. It's going to go a long way as you drive to FI. Until next time.